Hello traders, the title of the video is the whole truth about the 50% Fibonacci retracement. The truth, the whole truth, nothing but the truth about the 50% Fibonacci retracement. Let's get started. We are on a monthly chart of Memorial Production Partners, Epic MEMP, Mike Eco Mike Papa, belonging to the energy sector, oil and gas. And we want to talk about the whole truth about the 50% Fibonacci retracement level. In this tutorial, I will share with you, effective Fibonacci trading tips that one can apply with the 50% Fibonacci retracement level. All right. So if you look at this stock here, you can see that it went down, okay, from here, applying Fibonacci retracement all the way down here, okay, and then it rallied to the 50% Fibonacci retracement level. Now here we are, okay, and then people reacted and sold it. So why did they sell the Memorial Production Partners up to this point? So the stock is now at 0.16, that's 16 cents. Are they still in business? All right, so this is really big time. So now the first thing you want to understand that the 50% Fibonacci retracement is a very powerful Fibonacci key level, though 50 is not a Fibonacci number as such. Traders use the 50% Fibonacci retracement level. So you say to me, Joe, you recorded a video already about this. What's this one about? So I encourage you to watch the full length of this tutorial. All right. So what we want to do is that whenever we see a financial instrument, if you are a swing trader, especially position trader or an investor, pay attention carefully. So if a financial instrument, okay, is bearish from point 0 to point 100, and you rally up to the 50% Fibonacci retracement level, what you need to do, all right, the reason why those market participants were quite aggressive to sell this stock, they will go and look at the sector. So the first tips about the 50% Fibonacci retracement level, if the sector is bearish and any financial instrument that belongs to that sector rally up to the 50% Fibonacci retracement level, that is a candidate for a bearish trade. It means that we will have a bearish trading setup for any stock that belongs to a bearish sector that rallies up to the 50% Fibonacci retracement level. So as if you were here and the healthcare sector is bearish, you will go now. So first thing, is the sector bearish? So if the sector is bearish, we will be looking at stock that belong to that sector, and most importantly, financial instrument that rally up to the 50% Fibonacci retracement level, and from there we'll implement a top-down trading method to trade it. But it's not finished yet. Okay. By the way, this video is for educational purposes only. It's neither a solicitation or an offer to buy or sell any financial instrument. All right. The opposite is also true. If a sector is bullish, now everybody's happy because I'm using the word bullish. Okay. If a sector is strongly bullish, all right, everybody want to buy in that sector. There is a lot going on in that sector. Like we have seen recently, the technology sector was quite bullish because of Apple and Google, all right. They were bullish for a while. So during that time, stock that will pull back to the 50%, now we are here, pull back to the 50% Fibonacci retracement level, will be excellent candidate for bullish trades. Now, if the price pull back to the 50% Fibonacci retracement level and the sector is bullish, we will implement a top-down trading method to buy it. But it's not finished yet. Why? So, you notice that, okay, or another way that we can put it to traders, the market sentiment towards a specific sector is becoming bearish. It's not 100% bearish, but it's becoming bearish. So people are saying that, okay, the policies, all right, that are coming out are not helping that sector, okay, or the market sentiment is becoming bearish. we will apply the same strategy, stock that rally to the 50% or pull back to the 50%, all right? For bearish, we want them to rally to 50%. For bullish, we want them to pull back to the 50% level, depending on the sector is becoming bullish or bearish, market sentiment. So you want to check the sector and you want to check the market sentiment, all right? And the position traders and investors love this type of trading a lot. What they do, they just sell it at 50% and they shut it down. And you don't want to challenge those market participants. But in order to make this strategy more solid, all right, we're going to go now, and what you need to do, if you notice that the sector is becoming bearish or is bearish, all right, and the stock rally to the 50% Fibonacci retracement level, especially on the monthly chart, all right, to polish this strategy, one should now go to Google Finance. Okay, stock is bearish, or sector is bearish, or sector is becoming bearish, all right, and a financial instrument belonging to that sector rally up to 50% level, that's a bearish candidate. All right, now we go to Google Finance and we want to check the balance sheet. So you're going to say, Joe, you talked about this before, blah, 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 but stay with me, please. So we will perform Google Asset test by comparing the total current asset. You can see for this stock, the memorial. All right, so you can see that the total current asset from 2000, I want the annual data, okay, 2012 to 2013, 2014, 2015, total current asset in 2012, 103 millions, all right, 2013 is 70 million, so it went down from 103 to 70 million. And then in 2014, it went up big time, 303 millions. And then in 2015, it went to 340 millions. Now we want to compare. So it's going up. In the last 4 years, the trend is up for the total current asset. Now we're going to compare the total asset to the total current liability. I'm here now. The total current liability, 43 millions. In 2012, it went up to 73 million in 2013, and more than double in 2014. So from 73 million, it went to 152 millions dollars. So you want to ask why? Because they have accrued expenses that was 89 millions. So it went up big time. So whenever you see that suddenly it goes up big time, you want to find out why. So it's going up, and now in 2015 it's 93 million, but the trend is up, and this is a bit worrying in 2014 because it has more than double. But you can see that if you compare, though the total current liability was going up, if you compare it, so you can see here, look at this one. Here it is, 2012, 2013, look at that. 2013, look at this. This is what we are talking about, the Google Asset test. The company had $70 million in total current asset, which means if they ask them to pay their current liability, all right, the maximum money that they have available, okay, the liquidable asset that they have is 70 million. Now, look at the total current liability that they had at that time, 73 million. They have failed the Google Asset test in 2012, big time. The total current liability is 73 million, and the total current liability is 70 million. Now, let's go back to the charts. 2012, so they were here. So 2012 to 2013, they were here. Okay. The market, in fact, was bullish. The S&P 500 bullish. So this stock was benefiting from that. And then slowly, as it reached this point, people sold it down. All right? And it went up to the 50% Fibonacci retracement level, and now it's going down. So the point I'm making here about the 50% Fibonacci retracement level is a powerful key level. It's a psychological price level. But if you want to use it as a swing trader, as a position trader, as an investor, First, pay attention to the sector. All right. Is the sector becoming bearish or is the sector bearish? All right. Okay. Now, check the stock, the balance sheet of the stock. All right. Perform what we call Google Asset test. Compare the current liability to the total current liability to the total current asset. That's what we call Google Asset test. Because the company should have enough money to pay their short-term debt. If they cannot afford to pay their short-term debt, the investor will react, and the smart investor will start taking position. The opposite is also true, because this is bearish. People will say, "Oh, Joe, you're telling people all the time to sell." No. The opposite is also true. If a stock has passed the Google Asset test, all right, so their current asset is solid in comparison to their total liability, all right, good, excellent, turns up for that stock, okay, bullish candidate, passed the Google Asset test with flying colors, okay, good. Now the sector is becoming bullish, nice, or is bullish. We don't want a sector that is already bullish and is overbought. We want a sector that still got more to do, okay? A sector that is likely to continue to be bullish for a while. You don't want it to come into the market when the bullish season is over, all right? So be careful. So now, if the stock has passed the Google Asset test and the sector is becoming bullish, now we see that the stock, pulled back to the 50% level, all right? Fundamental nice, market environment good, sector looking bullish, we will be happy to consider to buy that financial instrument at the 50% Fibonacci retracement level. Why usually take place? This is what's happened to gold. You remember how gold went up? Gold pulled back to the 50% level, and the investor just loaded and they shut it down. Years ago, I remember a professional trader was talking about, he was talking to a group of traders, say that gold in the next few years will be very, very bullish and the dollar will go down. This was exactly what has happened. So this is a powerful strategy for investors, position traders, swing traders. Even day traders can take advantage of that. So how can you take advantage of that as a day trader? So suppose the market is becoming bearish, all right? So stock market is becoming bearish, S&P 500, one particular is bearish, and you see some stock rally up to the 50% level. So that day, the market sentiment is bearish, everybody, whoa, everybody want to sell, okay? Now stock belonging to a sector that is more bearish, all right? Market sentiment relating to that sector is more bearish also. Market is bearish. Sector is also bearish. So day trader, you see stock rallying up to or gap up to 50% level. Those are candidates for bearish trade. Those who, if the market is bullish, all right, the opposite is also true. Market is bullish, S&P 500 bullish. Everybody want to buy because of the job creation and so on. That particular day, stock that pull back to the 50% level are excellent candidate if they belong also to a sector that is also bullish. With those strategy, using a 50% level, one can make excellent day trading, swing trading, and position trading decision. This is about the whole truth about the 50% Fibonacci retracement level, a powerful tool that the hedge funds and the big financial institutions are using. What they are doing is very, very smart, because a stock that was $100 before, now is $50. But not only that, the sector is becoming bullish. And above that, they have a strong balance sheet. They have part of Google Asset test, or they compare the total liability to the total current as total asset. Okay? What's going on with the management? They are happy with the fundamental analysis, but they want to buy. That's the time when the accumulation will begin. So buying, and the stock now start going up. All right? So what has happened for this to this stock right now? As you can see, they shut it down completely at that 50% Fibonacci retracement level. No one did buy, the memorial production partner. They shut it down. They were just selling it down because of those reasons that I've already mentioned to you. You see some stock also, they will shut it down at 50%, and it will just going up. Okay. Now, what is the future for this stock? All right. So I hope you have learned something for this. This is a very important tutorial for those who want to stay in the financial market. If you do not understand what's going on, you may, as a day trader especially, you see this, you want to give priority to bearish signal on for this stock, don't want to fight it. All right? Okay? If you have any question or suggestion, well, put in the comment section. And of course, I will be recording another video to answer your specific question. We are the TSTW24 traders talking about the whole truth about the 50% Fibonacci retracement. Happy trading to you all and speak to you soon.